Well, here's a quick programming note. ICICI Securities is rolling the red carpet on its BFSI conference, and it comes at a timely point given the fact that there are so many questions that one has about the health of the financial sector in India. Shilpa Kumar, who's MD and CEO of ICICI Securities, joins us to talk about the conference, their agenda, as well as what they're looking to pitch to potential investors when it comes to the financial sector in Shilpa, it's great to have you on the show. Thanks very much for taking out the time. Like I said, it's interesting from a timing perspective that you come out with the BFSI conference. What do you hope to signal to potential investors about the kind of returns that are very much still in store for the space, which has been beleaguered with one controversy or the other over the course of the last 6 months?
Yeah, good morning. A pleasure to be here on your channel. You're absolutely right. The BFSI conference, though it's an annual conference, is really at an opportune time. I think there are three different strands that we hope to pursue, because BFSI, while it's one acronym, it really covers I would say 3 to 4 sectors, and each sector is seeing something which is very structural. And also which is playing very strongly on macro and structural factors that are currently prevailing. So if you look at the B part of it, first of all, banks. I think there's a lot of interest over here on the banking space. I think we've seen this sector in the last 4 or 5 years really bearing the brunt of cleanup of asset quality. I think right now there is a lot of interest to see how banks position themselves and their franchises going forward. I think what makes this moment particularly opportune for this discussion, again, are 2 threads. The first being on asset quality itself and how it will play out. The remaining recovery part of the banking asset quality. But more importantly, I think the structural change triggered off in a sense by the events of the last 1 month. Wherein banks are also seeing some kind of tailwinds, both in terms of deposits as well as in terms of asset side pickup. I think these are nascent trends which investors will want to focus on. So that's really the B part. I of course then even more topical currently is the NBFC space. We have a fair smattering of both stalwart companies as well as newer entrants. I think the focus here naturally will be one of the liquidity issues and their implications for both a structural change in strategy for some of these NBFCs and HFCs as well as cost and growth implications. I would say these are the 2 broad threads. However, let me just conclude by saying there's another element which is to do with insurance and financial services companies. And that's a third element which again, merits taking a good long pause at. And therefore, we have active dialogues across all these 3 spaces.
Shilpa, hi there, good morning. And the one that I think piques investors' interest, it may be not because of the way it's performed, but purely because of the news surrounding it, would definitely be NBFCs. It started as a debt default by a single NBFC and it stumbled into a funding crisis for all it seems. While you can't really, categorize all NBFCs as one, how exactly are you looking at what has transpired within the space as a whole? No doubt it's left a lot of investors and companies with burnt fingers. So what exactly is it that you're hoping to hear from some of these companies?
Yeah. So, the one thing always true about any financial company is really that they are basically all having high leverage, and therefore how they handle their duration really becomes a very critical point in terms of stress, in times of stress rather. And I think if you kind of put the NBFC sector in perspective, they have really been the high growth part of BFSI over the last few years, stepping in to fulfill the role of credit growth in a significant way. At times, they've actually outgrown banking sector credit growth by as much as 10 percentage points. I think what is now, kind of playing out is the, not just asset but the liability part of NBFCs, which again, if you really think about it, from the last year onwards, there was a special impetus into liquid funds as a lot of money moved out of equity markets, out of other forms of savings into liquid mutual funds. And therefore, what we really saw play out on the liability side of NBFCs was a significant, taking advantage of this available money. But the flip side of it, of course, always is because this money came largely in the form of short-term commercial paper, it really affected the duration mismatch of some of these companies. I think what you're seeing now is as the duration gets lengthened out and you're seeing a number of NBFCs come to the market, do some bond issues, you're seeing them ramp up their bank lending once more. And as this duration kind of lengthens, for sure it can have impact in terms of cost of interest rate and cost of borrowings. And I think what investors are really looking at is how will this impact the basic business model of NBFCs? Will it simply mean higher costs which can get passed on, or will it affect growth? That's the second. Or will it, influence some other kind of significant change in strategy as NBFCs seek to align themselves to this new normal? So I think that's really where a lot of interest and a lot of questions will be.
So what is your sense? Private banks, corporate banks gained, or private banks gained because PSU banks lost market share. Banks were not lending, NBFCs were able to borrow because there was a lot of liquidity, they were able to grow at 20% plus. Now that NBFCs by default would be forced to contract their balance sheet, who gets bulk of the credit growth? Will it go back to credit banks, or the credit growth may just slow down? What is your sense?
So, I think it's a very interesting inflection point that we're seeing in the financial industry at this point in time, because banks with cleaner, stronger balance sheets, particularly on the private side, where capital is not such a concern, will be, looking to ramp up on their franchise. Incidentally, we've just seen some very good credit growth numbers. I think the highest that one has seen in 5 years, 15%. But I think the important fact is how will banks, use their liability franchise to grow in this market, even on the asset side. So I think that's really one important inflection point. I think on the NBFC side, what will really happen, and this happens in any industry under stress, is that the stronger business models will in a sense be able to strengthen themselves. Now, what do strong business models mean? It could be, for example, assets where duration and liabilities were more or less matched. If you had shorter duration assets, shorter duration liabilities, or if you had a fair balance of liability funding, which helped sustain you and therefore did not really mean very significant increase in borrowing costs. So all of these factors will really distinguish in a sense a quality business model from one that really came under stress on account of what is happening on liquidity right now.
One word on insurance. I mean, NBFC slowdown has got nothing to do with the fact that insurance sector in India is growing, both on the life side and the non-life side. Yet we've seen a 15 to 40% correction in some of the insurance stocks. Do you think this is pure sentiment and this is a real solid buying opportunity for long-term investors to lap up good insurance cost companies?
Yeah, so I think, I see a little bit of, differentiation in the way investors look at general and look at life. In fact, if you look at, general insurance, which is kind of listed, you'll observe that they have not seen as significant a price volatility as other parts of BFSI. I think probably that's also because, not only are there tailwinds, for example, in the nature of some regulatory changes that have been positive for the sector, but also in terms of actually, investors seeing general insurance as a much more structural play on the economy. On the other hand, life insurance, there are various different business models available. in terms of the life insurance space. There are a number of companies listed in this space. And yes, while there has been price correction in these stocks, I think investors are also looking closely at some of these names, and I must say that we have a good attendance from insurance companies, life insurance companies today, and certainly there is interest in meeting with management in this area.
Right, Shilpa, we've not interacted on this forum, but I look forward to your continued support and certainly seeing much more of you going forward on the channel. Thank you for joining us, and thank you for letting us cover the ICICI BFSI conference.
Yeah. Thank you. Pleasure to have been here.